Hey guys, Justin Wine on Monday, February 14th, 2011. I'd like to do a brief video market recap for you. Here's a daily chart of the S&P 500, and as you can see, the resilience of the market continues to be very impressive. We are still working through this rising price channel dating back to early December, and at the same time, we're not exactly blowing off 2 or 3% a day higher as far as the broad market's concerned. Now, we were up less than 1/4 of 1% today. Now, what's interesting is that 2 Fridays ago we had this 90% down day, this big red candle, Maribozu's on many charts, as they're known in Japanese candlestick terminology, on pretty heavy selling volume. And it's fairly rare from the research that I've seen that you don't follow that up with anything to the downside. You expect a couple days bounce, but then you'd expect a little bit deeper correction. Not to say that you'd expect a brand new bear market by any stretch, but at least a deeper correction, and that never really is even materialized. That was kind of it, this kind of one-day blip. So that, I think, just illustrates just how strong the underlying bid to this market really is, and it just illustrates that the trend can go on much farther and usually is much stronger than most people think is really even possible. So this is kind of the market that we're dealing with. Again, on the surface, it's tough to really make a whole lot of money if you're actually just long, especially these past few days, just the S&P 500. But underneath the surface, I think we're seeing a stock pickers market or a sector pickers market. Really the same kind of analysis as far as the S&P applies to the NASDAQ. Again, dripping higher within a rising channel, resilient. Same with the Russell, continues to move higher, has had every reason to sell off. The same with the financials too. Underneath the surface, I think some of the financials are looking very impressive. But again, the broad ETF chart, as far as the broad market's concerned, many of these leading in the season sectors, similar kind of charts, just had a reason to break down, had every reason to, and refused to, failed to. The bulls have just been incredibly resilient, and they just kind of continue to move higher. Now, what's interesting is the transportation stocks. I see after hours this evening, Federal Express is down a little bit on weaker guidance, but they kind of recaptured this key 5150 level here, this resistance, after a 5% correction. This was a rather sloppy consolidation pattern, and nonetheless the bulls were able to recapture that. So even if the trannies do come in next day or two, so long as they hold this 5150 as current support, again, prior resistance. Now, the issue is whether this turns into current support if we even test it. I think that would bode well for the trannies going forward. Probably one of the weaker parts of the market, if not the weakest, is the emerging markets. Remains a very sloppy daily chart here. And sure, the recent sell-off probably has seen a lot of shorts take profits here, especially with this big green candle on Friday. So it's tough to be aggressively long or short the emerging markets here. Possibly get a little bit of a bounce, but nonetheless, I want to emphasize this is a pretty sloppy daily chart here. So the issue is really, as far as stock picking and sector picking, you really have to determine what if you're chasing and that kind of thing, the probabilities of whatever setup you want. Now, Netflix had an earnings gap up, and it's continued to kind of just drip higher, and now it really kind of moved today up over 7%, but the issue is the risk reward of these setups, and that's why I think a lot of these names, as I pointed out over the weekend for 12631 subscribers, a lot of these kind of leaders or Wall Street darlings or high growers, they've kind of been predicated on whether you want to play the earnings, like Chipotle. You take the Netflix issue, and then even like a Baidu, similar kind of situation with the big gap up, kind of dribbled higher, and then it really took off again. But on the other side of the coin, you're seeing names like Akamai, another name that was previously, especially last summer and fall, a leader, and you kind of got hurt there with the earnings. So I'm not so sure with a lot of these the perceived leaders of the market, like even Amazon. I'm not so sure that we're seeing the high quality setups. Where I am seeing the high quality setups, some of the smaller financial related stocks. NCT was a name. Newcastle, we've been playing in 12631, came up on a lot of PPT screens. Nice flat type base, and finally saw a breakout on uptick in buy volume. A lot of the solar names look good, although they are reporting earnings later this week. So the key is to be nimble there. A name like Janko Solar, JKS, again, another nice type base, and then breaking out here.